QSEHRA payments received by disability recipients are not taxable under the Federal Income Tax Code. Qualified Social Security payments, including those made as a retirement or survivor annuities, are not taxable under federal income tax law. In fact, only those payments that have a payment valuation are taxable. Such payments include retired pay, annuities, and payrolls. This means that the recipient of these benefits will not owe the IRS any money if they are paid during a period when they would otherwise be taxable. QSEHRA payment decisions are based on a number of factors. One factor considered by the SSA is the disability rating of the person receiving the payment. Each year, the agency takes a look at each of the recipient's past records to determine their disability rating. These ratings are used to help the agency come up with a determination as to how much in income can reasonably be expected to be received by the person in the future. In cases where the rating is low, the payments are usually made in smaller amounts. Similarly, if the rating is high, the payment amounts will generally be larger. However, the SSA cautions that it is not an easy task to make these determinations. It says that some payments may appear to be excessive at first glance, but once all the numbers are crunched, it will be revealed that the amount paid is actually fair. If one's disability rating falls below 25%, for example, the amount of money that the person is expected to receive in monthly disability payments will be lower. Likewise, if it is higher, the payments will be higher. However, because the disabled person will only get half of what his or her actual eligible salary was, these payments do still follow a standard formula. In addition to the standard federal income tax which all taxpayers must pay, they also have to pay Social Security taxes. The payments that they receive, however, are exempt from federal income taxation. A person who receives payments from Medicare does not need to pay this fee, nor does a person who receives disability payments from Medicaid. Another group that does not have to pay taxes when they receive payments from either Medicare or Medicaid are military members and their spouses. A person who is receiving QSEHRA payments will need to file a federal income tax return. This means that the person will have to prepare and mail in the appropriate forms. However, the person must not forget to include any necessary deductions on the form that he or she completes. Anyone who has already sent in the appropriate forms for federal income tax must also fill out a FAFSA, free application for federal student aid. Both of these forms can be obtained from the web. There is no reason why someone who receives payments from one of these two programs cannot also claim a disability as a credit along with their federal income tax payments. Claiming disability as a credit against a federal tax refund is much easier than claiming it against federal income tax payments. The disability amount in these types of cases is equal to 100% of the federal poverty level. Once you complete the necessary steps to claim federal disability as a credit against your QSEHRA payments, the benefits for your QSEHRA payment will be sent to you in the mail. When you receive your payment, simply take the time to check if the payments are being applied to your QSEHRA disability account.